We start with a sell-off, another rapid reversal in the markets today. Earlier this session, stocks were actually higher. Hard to believe, but true. The Dow was back up above 28,149, but only for a cup of coffee. Before more headlines began crossing and then more selling programs hit, and the market turned south. The CDC saying the U.S. has done a pretty good job so far with rapid response, and coronavirus cases are still very low. But it also warned that the virus could hit us as well, and that will likely take down economic growth and earnings projections. So, Guy,
yes,
the nearly 2,000 point haircut in 48 hours of trading, is there any place to hide, any way to protect our viewers and listeners' portfolios today?
Well, I think we've done a decent job of leading people down that path, and it comes in the form of bonds, as we've talked about now for months, and the gold market as well. Now, you could say, well, the gold market sold off today, and yes, that's the case. We can get into that later, but I still think both work. In terms of, though, what you do now, you have to be looking for levels where this stops, and we've been talking about one specific level in this S&P 500, 3030, which is now just 100 or so S&P points from here. And that's not unrealistic to think we could see it over the next week or so. I mean, given what we've seen over the last couple of days, you could see it in 24 hours. I think that's a reasonable level of a retracement. I think that gets us down about 12% from the all-time high. It makes sense for a lot of reasons. Then you try to figure out your individual stocks accordingly. If you want one other line in the sand, and we've talked about this, I know Dan's been all over this, the Russell never made a new high while the S&P was making a new high. The IYM, the Russell Small Cap Index, 150 is your line in the sand there.
Tim, any reason to believe that the selling is over?
No, there's no reason to believe, because if you think about what spurred on this next round, it's a combination of understanding, where Korea, which is really at the center of the global supply chain, certainly as we get into semiconductors and some of the things that have been, most aggressively hit. But also the fact is that the disease is spreading, and the disease is ultimately affecting consumer confidence. We talk often about really the consumer having been the savior for this economy. And let's be clear, this is a market that was, absolutely unperturbed by the move in the disease and where we had gone in the 3 weeks, while bond yields were probing lows. And I know if you look at the Treasury market, which we got to 132 on the 10-year, again, record lows, took out those lows from 2013, which was really the last time we were around here. That tells you, and that told you, though, even before the equity markets responded. So I don't want to be sensational here. And in fact, I think markets are on a short term very, very oversold. Having said that, what's driving sentiment right now is something that is impossible to understand. And why should that change overnight?
On our special last night, Dan, you and Josh did a great job, and you said something which proved accurate. And you guys said, both of you agreed, that if the market tried to rally this morning and rolled over, as it did, that would be a bad situation for equities.
Well, I guess the situation was that there was no scenario, there was no tweet, there was nothing that was going to come out that was really going to change sentiment overnight. And so I just think what's really interesting about the CDC coming out and the leg down that the market took and closing really near the lows here just tells you that if people are dissatisfied with the way China, authoritarian government, has handled this disease, how do you think it's going to be in a block of nations that have free movement in Europe? How do you think it's going to be here in this country with a bunch of citizens who have a lot of guns and stuff like that? I mean, it's just not going to go particularly well. I'm just saying. So that's really what the panic was today. And I guess what I would say is that I don't think there's really any cause for alarm for the same reason, at least as it relates to the stock market. We went up, 6, 7, 8% over the last 2 months for really no good reason. And the fact that we've given back 6 or 7% in a straight line, makes some sense. Guy's level of 3030 is also the breakout level in the S&P from late October, that it basically went up 12% in a straight line. So to me, that's a level, I think, where you start buying the dip or thinking about those names that you've been wanting to get into. 3030 in the S&P 500 is the intersection of the late October breakout, and it's basically the 200-day moving average. And if we don't know what the heck is going on here, a lot of traders, a lot of investors will lean on technicals.
There is a point of view, Gina, where you hear it on the social media. People say, why are you making such a big deal about this? Luckily, the fatality rate's low. We got 14 cases in the United States. It's not that widespread in Europe. Here's why, and tell me if this is wrong. China is, let's call it 1/4 of the global economy. Europe, 1/4 of the global economy. We're a fourth, and the rest of the world makes up the rest. If we start to see a slowdown in Europe and China, as we've already had, we have to take down earnings estimates, multiples, earnings yield, everything.
Everything has to come down. I agree with you. And I'm not sure that just going back to October is going to cover that kind of a scenario. And I think what we're still grappling with is, are we dealing with a local Asian outbreak, or are we dealing with a global pandemic? Those are two very different things. And those, granted, even in the global pandemic scenario, you're still dealing with something that's probably a quarter to a half a year long in terms of pain. And then you tend to get a recovery from there. But we don't know what we're dealing with yet. And we're still trying to figure that out. And the big stress test is what happens and how does the U.S. handle it? Because if the U.S. cannot handle containment of this virus, then no one can.
So look at the, hold on, guy. I want Tim jump in. But keep those stock charts up here of the S&P laggards. I think that tells a story. Look at the names on this list. If you're on the radio, here they are: American Airlines, Occidental, Southwest Air, Live Nation, and Marriott. Here's why I find this list interesting, and the stocks all got whacked 8 and 9%. Tim, Live Nation is a concert promoter. Right? They're pretty much, they're global, but they get people together. Southwest Airlines basically has no international presence. A little bit, whatever, Puerto Rico, that's it. This is the market saying people are going to be nervous about congregating in groups and doing things where they might spend money.
Right. So we've never contemplated this dynamic in this country. We, at least not in my lifetime. And as has been pointed out here, we have a case here where this is typically a contained geographic event. So consumer confidence has been critical to this market. The other side of this, though, is when the Fed starts to say, and there's been quotes over the last couple of days, essentially we're ready to respond, or we're watching. And what can the Fed do at this point? And it gets to something that we also talk about on the show for a long time. To me, the Fed's comments here sound a lot like the BOJ, who's been, basically flailing in the wind for many years here. So you're right, Brian, to point out the domestic element of that sell-off. I think airlines, the multinational ones, I think the entire airline space is being sold for that reason.